Tuning in to the Futures Radio Show podcast. How to trade Bitcoin and currencies like a pro. I'll be the first to admit trading Bitcoin and currencies, not really my forte, but the two guys joining us today, Gareth Soloway and Blake Morrow, are two of the best in the biz. So I look forward to chatting with them, and we will be taking your questions throughout today's conversation. Make sure you put them in the YouTube chat. And if you're joining us on Twitter, you can head over to YouTube to participate in the chat. Today's podcast is sponsored by TradeStation and FTSE Russell. If you're a serious futures trader, you need a powerful platform to match your skills. Enjoy flexibility and trading power with TradeStation's award-winning platform. Go to tradestation.com/Anthony to learn more. I will tell you that I am on TradeStation using it every single day. Did you know that with an 81% share and a 1.6 trillion in institutional assets benchmark, the Russell 2000 is the top choice by far among institutional investors? CME Group has recently selected the Russell 2000 index for the new event-based contracts launched on September 19th. You may have heard me talk a little bit about those in some recent podcasts. The daily options on futures contracts will offer short-term trading opportunities for investors seeking to take a position on the Russell 2000 future daily price moves. For more information, go to FTSERussell.com. Let's bring in two of my guys. What's up, guys? Let me get this situated here. Right. How are you?
Hey, how's it going?
Hey, good to see you, Anthony.
Great to have you back on, Blake. Gareth, first time meeting you. I recently just found you on Twitter, and Blake talks so highly of you. And
You.
other people in the community I know have known you. This is the first time you and I are even meeting and speaking. So thank you so much for joining us. I really appreciate it. We're looking forward to getting to know a little bit about how you trade Bitcoin today.
Yeah, sure. And thanks for having me. For sure, it's a pleasure to be here.
So one thing I want to tell everybody before we get started is, and I've participated with this in the past with Blake, and I know that Gareth is going to be there this time around, is the Trader Summit. And I would say by far, this is the biggest cast, the top cast in the financial industry hosting any sort of online event. I absolutely love it. I know pretty much all of the people that follow me love to attend and go to it. I'll actually put a link in here down below right now to talk about that. But I think I might as well hand it over to the man who really helped set this up to talk quickly about Trader Summit before we get into our discussion today.
Oh, well, thanks. And it's really quite an undertaking putting this off. This is actually putting this on. Excuse me. This is our fourth event, and Anthony and he's going to be a sponsor for the event. So we're really happy to have you back. This time as a sponsor. Last time you were a guest. Gareth, you're going to be there. I love having Gareth, and him and I get to have very candid trading conversations. But really, what's most important is we have like a theme and around these events, and they are free to register. By the way, they're free for any of you guys and gals to register. But you have people like Danielle DiMartino Booth, who you see her on Fox or you see her on CNBC, but getting a good opportunity to talk with her about how she sees the Fed and other central banks handling something that is really facing us this winter for not just the United States but globally, a big energy crisis, and seeing how the markets are going to how the central bankers are going to respond to that. But getting opportunity to sit with them, Jim Bianco, for you guys and gals to actually be able to ask questions at the same time, it's really awesome. Then we have, you can see the list of speakers. I could go through each and every one of them, but this type of talent, putting it all together is quite an undertaking, but it's for 3 days. You guys should register because if you can't make it and you can't listen live, you'll be the first ones to get the recordings a couple of days later. And if you don't, then, we publish those usually a month out or maybe 2 months out. And then, there's so many actionable ideas. You want to have them ASAP. So I highly recommend that you do register. There's a lot of giveaways. Our sponsor 8Cap is also giving away like 2 free iPhones randomly to registrants. They're doing like trading competitions throughout the event. So yeah, check it out. Check it out. Gareth, I'm excited to have you there this next time, and you too, Anthony. It's going to be really cool.
Yeah, it's a great event. And, we can get into talk a little bit about some of the things we're going to discuss today and how really I think a lot of the stuff that we'll talk about today, people are going to just even get a more in-depth look at, what Garrett says or you say or I say
Yeah.
at the Trader Summit. But today, one of the things I want to start with you, Gareth, is, I actually put in the chat, if you guys are watching on YouTube, let us know, do you trade Bitcoin or do you trade currencies? And because we'd love to hear from you, we want to hear what you guys think about this topic, because it was actually funny. Part of my team that works behind the scenes is like, I can't wait to hear from Gareth and Blake, because let's face it, it's not something that it's not an easy thing to get into, right? I mean, there's probably a ton of people in there and trading Bitcoin and trading currencies. It's probably the most popular products in the world, right? But it's not easy to become successful trading them. Gareth, why did you choose Bitcoin? Really is right. Like right now, it seems as though that's the product you're trading the most.
Yeah, so I mean, the beautiful thing about what I do is, and I trade stocks, commodities, currencies, and crypto, is just that I'm a chart guy. And so as long as there's volume, and this is why I mainly trade Bitcoin when it comes to cryptos, maybe Ethereum a little bit, Solana, some of the more active ones, but you need that liquidity to be a safe trader. And what I mean by that is that the less liquidity you have, the more risk the individual investor takes on, that a bigger player can kind of manipulate or create some price swing that you can't predict. And so the key is, again, Bitcoin, very, very liquid, easy to get in and out. Same thing with Ethereum. So I think those are the main reasons why I trade mainly Bitcoin.
Yeah, they're definitely super liquid, right? But I guess the one thing I look at when I look at the volume in them, it's so broken up. I mean, this is the one thing that is difficult for me, like as an S&P futures trader. We're the center of the universe with the E-Mini S&P, right? So everything that we see, all the volume is really centralized through CME Group. When you look at Bitcoin, there's volume all over the place. It's hard to even just, to know where, if there's any true volume coming in. And I know it's super liquid because a lot of people are trading it, but I'm just curious maybe where you go to look to see where some of the volume is and like where the real price action's taking place.
Yeah, so I mean, volume definitely plays a role, right? So if you see higher volume candles, they generally coincide with either flushes or pops. But I kind of keep paying attention to that. I would say the best example of that would be go back to no, October, November, when Bitcoin was just taking out those April highs at 69,000, and the volume was very, very thin up there, and that was telling me that big money was not buying heavily, and it's just one of the many, many warning signals that there were on Bitcoin at that point in time, considering all the hype. And I was at the Dubai conference. I was just got back from it this year. Last year I was there, and I mean the hype was just so incredible. Something I've almost never seen before, except maybe in the .com era. But it was nuts. But yeah, I mean, for those type of things. But really, when it comes down to it, I just look at charts and I let the charts tell me, right? It's not about me forcing my views on charts. It's about them saying, all right, this is the pattern formation that's there. That's telling me there's a bounce coming or a pullback or some sort of pivot coming.
Hey, Anthony, may I ask a question really quick?
Oh yeah, fire away, man.
Gareth, you and I have obviously been talking for a long time, and you do follow the charts, and you follow the charts very well. You're like, if I'm ever playing blackjack and I'm playing somebody that plays by the book, I'm really happy at that table. And then, you get some random people, you're like that guy that I'd really like to have on first or third base at the blackjack table. You play as you should, right? But I wanted to ask you, as far as your last year's experience in Dubai, that hype. I mean, you've been through the .com bubble like me. I've traded through it. You traded through it, and did that hype really kind of get your attention to where you had to start looking on the short side of some of these cryptos a year ago? Because you really turned bearish over this last, well, I would say at least a year, but throughout the fall of the crypto crash, if you will. But did that kind of influence you last year?
Yeah, it definitely did. I mean, the one of the keys to being a good trader or investor is to read the psychology of the market. And one thing I've become very aware of is that when too many people are bullish, then it's time to be more careful and look bearish. And I, for sure at that point, it was one of those events where I couldn't believe the insanity going on. It was kind of the same in stocks, right? I mean, you had AMC, you had GameStop, those type of runs going on. And if you look at certain weird things, like there's so many weird comparisons to the dot-com era. Like, for instance, the market cap for crypto had gotten to about 3 trillion. And at the height of the dot-com era, it was 2.9 trillion. If you looked at the Super Bowl, right, the Super Bowl in 2000 was called the dot-com Super Bowl because there were so many dot-com commercials. Go back to this last Super Bowl in February, we saw kind of the same thing. So eerily similar type of things that basically raise the PR status. You know, it's like PR for crypto. And so what you have is you have this scenario where if there was anyone on the fence that kind of liked crypto but hadn't gotten in yet, that was what coaxed them all in. And I always tell people, like, if you have 10 people in a market, right, just 10, in the beginning, only one person's long. As it goes up, 2, 3, 4, 5, 6, you know, basically at the high of the chart, that last person goes long. And then what you have to remember is you have to say, okay, well, who's going to buy it now? If everyone's already long, if all 10 are long, there's no one left. And we had kind of exhausted that because of all the hype. You know, you just remember you just had seen the launch of the Bitcoin futures ETF at that point too. So there was immense hype around that as well. And it's just, I mean, the emotion and craziness was just, I mean, I thought I was going to get tarred and feathered. I mean, it was like that crazy, you know?
You know what I find interesting about Bitcoin is that you had the richest man in the world say he bought it, right? Elon Musk. You have every single thing possibly that they wanted to happen for it come out. And I still look at it and say, yes, it is something that is going to be important going forward. But when I look at what's happened with it, and then from the news side of things, the most important things have happened. So I think that's part of why it's hard for me to get super bullish it. I mean, I don't even hold it anymore. I used to hold it. I wouldn't really say a hodler, but I would trade in and out of it. Do you feel that way? Do you feel like most of the good news has already occurred, or what would maybe be some good news to really spark that interest again, to get people really more motivated to want to go back in and start trading it and buying it?
So for me, it's regulation. And I know that sounds super counterintuitive.
The
like
opposite of what they wanted, right?
Right.
Yeah.
Everyone's like, you know, keep the government out and everything like that. I'm like, I'm an investor. Bring the government in, because as soon as the government comes in and says these are the rules, then you know what? Institutions are going to say, okay, we know the rules now. Now we can actually decide if we're going to invest. Inevitably, a certain amount of money is going to come in from the institutional side. But I think that's what's the issue right now, is that you have a lot of people that are very intrigued. I mean, hedge funds around the world are like, I'd really love to get exposure down here at 20 or sub 20,000, but I don't know what the SEC is going to say in the next month or two. And so we just have to sit on the sidelines. So for me, I understand that you don't want the regulatory side, but at the same time, if you're going to hope that Bitcoin goes to $500,000 or even 100,000, you have to get big money in the door. That includes pension funds and all these other players. Then it can really rise. So for me, that would be a turning point. The beauty of it is that I think if that was announced, you'd see an initial dump because people would freak out. And then you got to be strong enough emotionally or with lack of emotion to buy that dip.
I mean, Blake, what do you think about that as a currency trader, right? You know, and I know you follow Bitcoin as well. I mean, that regulation is that's what to bring the interest back.
Well, you know, I mean, Gareth brings up a great point, and you guys all know this, being as seasoned as the three of us are. I mean, markets and investors don't like uncertainty. So when you bring in that certainty, you know, and as an investor, it's like, okay, well, right, like Gareth pointed out, rightly so. I know how to play the rules. So now I know what I'm up against, and then they can assess risk cleaner and in a better fashion. And that's what traders do. But you know what, in the meantime, I'm just going to say this, and I've been touting this all year. Well, ever since, you know, the Fed started to move and central banks started to move, FX is where it's at. Crypto's dead for now. Come trade currencies. This is where the volatility is at.
Yeah, I mean,
Right.
Well, I mean, no doubt. I mean, look, the U.S. dollar is, you know, the impact it's had across all markets this year is without a doubt the story of the year, right? I mean, what the dollar has done.
It's amazing. And I mean, and a really good case in point is just look at the US dollar versus the Japanese yen. When you have one central bank that refuses to move on interest rates, and you have, you know, the largest central bank, you know, the Fed raising rates aggressively, you get a really, really ridiculously bullish trend in the dollar yen. I mean, we're trading at levels we haven't seen in 30 some odd years. So, and this has happened all of 2022. I mean, the yen is just to give you a real quick number, the yen is down nearly 30% against the dollar in this calendar year, and those are ridiculous moves for central banks and economies to deal with. So, yeah, it's been a hell of fun, and I know Gareth, you like to play in the FX market too. It's been this is where it's
Yeah.
at. And
I
macro
mean,
matters again. Macro
Oh
didn't
God.
matter.
Yeah.
Macro
yeah.
didn't matter for years, and now macro is the thing. And matter of fact, if you're on Twitter and you don't have very many followers, just throw macro in front of your name and you'll get a bunch of followers. That's just
A
been
question kind of off topic here. Gareth, you travel a lot. I haven't traveled in years, but I used to go all the time. And since COVID, I've kind of just been a Floridian, forever now. I just gotta get out of here. But can we even go back to Japan yet with the yen that low? Is travel accessible there yet? Does anybody know?
I don't know. I mean, I was in Dubai just recently, but I haven't been to Japan ever. But I would assume your dollars are going really far right now.
That's what I'm thinking, man. I'm like, listen, you might pay up for a plane ticket a little bit, but Japan is awesome. I've been there a few times, but
Yeah.
I want to have a little fun with the two of you guys because obviously we have Bitcoin and then we have, the FX side, right? And obviously Gareth does, you both trade both of these assets, but I think that what I want to start off with you, Gareth, is look at you come in, you want to become a successful Bitcoin trader. Obviously, right now you're talking about the charts. What are the first things you're looking at every single morning or whenever you're ready to get into a trade? What are the things you're looking at? We'll say on the macro side of things, if you do it all, I know you're just talking about charts. And then how does your chart setup look?
Yeah, so I keep my charts super, super, super plain. Can I show my charts on here, by the way?
Oh yeah, of course. Yeah, you should hit the
Uh,
screen share and then we'll we'll
there
we'll
we
we'll
go.
bring them in.
So
There
I
we
mean,
go.
so I saw someone just asking for the dollar yen chart, and here it is right here. But I mean, I
Perfect.
really don't put a lot of indicators on my chart to start with. I might add in moving averages, Fibonacci, stuff that I really have as a core. But I don't like charts that are over cluttered because I start to get kind of a little bit distracted by too many things. So I really let the charts, talk to me. And one of the things I'm looking at here in terms of the dollar yen is number one, you're like you said, you're coming up to this, you got this high pivot, basically you're hitting here at 148, and then you got the 150 even number. And one of the things about even numbers is that it's psychologically important to investors and traders. So for me, I'm starting to actually nibble a little bit on the short side of the dollar yen and starting to pick up a little bit on the long side of the yen here, just because I do expect a little bit of a retrace, not necessarily a long-term trend change, but just as a trade in the near term. So that's part of it. And then I would say with my analysis as things go, I basically get up in the morning. I usually throw on CNBC, not because I listen to what their analysis is, but I like to gauge the global sentiment. So as a macro investor as well as a swing trader, I want to know, are people overly bullish? Are they under? What's the news of the day? What do I need to know? What stocks are mainly moving, right? So I think that's another big factor is that as a trader, especially as a day trader and swing trader, you don't trade something that's not moving, right? That's where you're going to get chopped by the algorithms and the bots. But instead, you want to find things that are seeing emotional reactions, right? Where is everyone rushing out of or rushing into? And then is there a technical level that you can kind of go there? But certainly, I think, I mean, dollar yen is, I mean, you're right on this. To think that crypto is as dead as it is and you're seeing more volatility in the bond market, the stock market, and currency markets is wild right now.
So the checklist that it's like what's sentiment, right? What's the overall environment, looking around and just getting a gauge for what's happening, right? And then you look at the chart, keep it simple levels. And I love that because that's very similar to what I do in the S&P because I think we live in a world where everybody is searching for like this perfect strategy, right? I mean, that's what everybody's searching for. And you've been very successful trading Bitcoin. And is it just because maybe you do keep it simple and you look at these levels and you just are basically a level to level trader where you're not thinking too much about all these indicators and stuff. You're just really looking at what is the price action telling me?
Yeah. Yeah. I mean, price action is basically caused by investors and traders. And I think one of the big misconceptions that a lot of the retail crowd has is that charts are somehow different, right? But in reality, when you're trading a chart, you're basically trading the masses in terms of their emotion, right? Greed and fear. And so you're really and that's why gauging psychology of the market is so important, is because that goes hand in hand with the charts. When you get to levels that are ridiculously extended, do you have that max bullishness that is kind of also confirming that feeling of that, all right, this is way out of control, and you start to look for those pivot points. And again, a lot of people will say, like, don't buy a falling knife, don't, try to short something that's crazy. But I think when you utilize the charts correctly and you kind of do it in a safe manner, you can do it in a safe manner. That's where I make my biggest scores, is finding these pivot points.
Blake, what's it like for you to start a day?
Well, it's early.
Yeah, you are.
I'm a West Coast trader, so we started at the 3 o'clock hour. But
That's
in the
at night
morning,
for me, man.
yeah, it's
not early,
an
that's
early
late.
day. But the thing that I always do first thing in the day is I see what data is going to be released, because it hasn't mattered for a long time, but actually data matters. Economic data matters. Understanding that right now in today's market in October of 2022, good favorable data that shows a stronger US economy is actually worse off for risk, and it's very strong for the dollar, and vice versa. So, knowing what data is coming out, what the market's really focused on, like right now, obviously everybody's paying attention to inflation data, but now we're going to be pivoting over the next, I would say over the next, month to 3 months, just say that the end of 2022, we're going to really start focusing on jobs, and to see how the employment picture looks, with employers facing all of these price pressures, and then also even following some earnings. Like it matters to me what these tech companies are doing, and how the market actually responds to them. So me just taking a look out for my day and just seeing what data is happening, or what economic data is happening, what's happening for the day, but also how did Europe and Asia react to certain things that happened overnight, whether it was economic data from different parts of the world, or from headlines that come from seems like almost every central banker's got some sort of headline and things to say on a daily basis that the market will react to. So really that's how my day starts.
I want to go back to you, Gareth, because I'm doing very similar things to what he is, looking at the data, because obviously the data right now, it's like if you don't know when the number is coming out, you can just get your face ripped off in an S&P move. Remember last year we're moving like 50 points in a day, maybe. Now we're moving 150 points a day. So, and these data points are can be crazy. How much do you see the data having an impact on the price of Bitcoin these days?
Yeah, I think it does have an impact. At least in the last couple of weeks, it's been kind of minimal, because Bitcoin's gone really to sleep, which, by the way, is very reminiscent of, there's a 2008 period where it was the quietest period, and then we dumped out about 50% from there. And I am concerned that could be in the cards at some point in Bitcoin. But I think the data, you have to pay attention, because the data influences the Fed, which then controls the dollar and yields. And we know that, if you watch the S&P, if the dollar upticks, the S&P downticks, and vice versa. So it's all connected, and it all trades back to Bitcoin, and Bitcoin generally will do the same as the S&P or the NASDAQ.
And because Bitcoin is global, right? It's the, what do you want to call it? Maybe the global currency at this point, right? It's the global digital currency, I should say. Yeah. What are the best time zones that you see to trade in?
Oh my goodness. Wow. To trade in, it would probably be the US stock market hours, because I think you do get a little bit more volatility. What you'll notice is on the weekends, when the stock market's closed, Bitcoin has little upticks, downticks, but for the most part, by the end of the weekend, it's usually flat. So I would say US market hours.
And what about you, Blake? Because everything is about the dollar now, are you noticing that a lot of these moves are coming a little bit later than you're used to seeing, or is it still really a very early morning for you?
Well, no, it's definitely an early morning for me. And if I had my way, I think trading like the London session would be the best. Like, being a European FX trader is where it's at, because you're around catching some Asia moves, but more importantly, when Europe and North America are open at the same time, you're getting a lot of activity. Things tend to slow down after Europe goes home. But Asia's been very much in the spotlight right now because the renminbi or the yuan is obviously, even though it's a peg currency by China, and they manage the float. They reprice it, and you've seen a lot of people selling yuan and buying dollars, and because of that, alongside with the yen, you're seeing a lot of activity in Asia too. So it really kind of depends on the market. But right now, at this moment in time, European hours, early European hours, and Asia hours are really good. North American hours are always good while Europe's open. So
Yeah, so that's that sweet spot. So
yeah.
what is the number one thing that you see retail traders making the mistake when they come in and trade currencies?
Well, right now it's leverage. It's all about leverage because the volatility is so high. What you're trading and the size you're trading does matter. I mean, I did prop trading for a firm for 4.5, almost 5 years, and traded a lot bigger size. Learned a lot during lower periods of volatility. But man, if I was trading that type of leverage in today's volatility, the swings, the P&L swings would be huge. So I think what happens with a lot of people is they get into this market and they think, oh, the volatility is so high, and they don't realize that knife cuts both ways. So I think it's important that you understand what your risk is at all time. I like to, before I get into a trade, whether it's the euro or the yen or and by the way, Gareth, I'm actually buying yen too. I started shorting dollar yen yesterday, and
Nice.
I'm wiggling into it. I think there's going to be a little reversion trade, a little intervention type of trade coming, but I know where my risk is. Like, I know where, I call it the line in the sand. So I pre-calculate, okay, my average is here. If I add a little bit higher, my average is going to be here. My stop is here. To my pocketbook, it's gonna be X dollars. Am I okay with that? And as long as I'm okay with that, and I can realize that my potential for gain is way more than that what I'm risking, then I'm fine with it mentally. But I think what a lot of traders do is they don't think about the downside first. They think about how much money they're going to make in this high volatility period. They don't realize that market can turn against them hard too.
Gareth, same question. What is the number one mistake that you see retail traders making when they sit down and trade Bitcoin?
Yeah, so I agree with Blake in that it comes down to leverage. And if you don't use leverage, then it's the same thing when you go all in of your full account in one coin, right? The common thing is, I mean, I think a lot of newer investors, they look at the markets or Bitcoin as a get rich quick. And I think things like Dogecoin and SHIB and a few of these others have weirdly done a disservice to investors where they hear about these people that made $100 million in a very short amount of time. And it's like, oh, well, I want to do that too. And the answer is that, 99.999% of people won't succeed. It's just like winning the lottery. I mean, we play it because it's, you dream, but in reality, most of us are not going to win it. And so you have to just go back to the basics. And in my career, I never made as much money and grew my wealth as quickly as when I actually started doing smaller position sizes. Because yeah, sure, you'd hit a home run here and there, and then you'd lose all your money. And then it's like, okay, well, now I'm below even where I started out before those home runs. And that just can't, that math doesn't work out when, you make 100%, but then lose almost 100%. So I think it's small diversification positions and just kind of singles and doubles. I always like to say in the baseball terminology of like home run hitters, what do? They're great hitters and they're glorified, but they strike out a lot. Well, in trading, you don't want to strike out. You want to, occasionally you're going to strike out naturally, but singles and doubles get you to the Hall of Fame. And I think that's where it's at.
I think the misconception that a lot of retail traders have when they come into Bitcoin or currencies or any market for that matter is that they want to become bigger. And they think by becoming bigger, more size, more leverage, that is the path that it's going to get them that more money. But what they don't realize is that they actually have a weaker hand in the market, right? Unless you're scalping for ticks, in my career, that's what I did for a lot of years, and size was the only way for me to scale it up. As I've grown as a trader and changed, I've learned that I don't have a strong hand in the market, especially in this volatility with any sort of position that's got me a little squirmy, right? You may know your risk going in, but once you put that on, it's a whole nother feeling. And you're just, you are now too attached emotionally to that. And when you have a stronger hand in the market with a smaller position, that's when you're able to hold the winners longer. That's when you're more confident of clicking out when it's not working, and just actually trade the market, right?
Yeah.
Blake, I mean, you and I have had this conversation about it. That is such an important part of trading is just that position sizing.
Yeah, and I think it's really understanding, like, the market dynamics change all the time, and kind of like you, I used to size up in the 90s during the dot-com bubble, trading fractionalized stocks before they
Yeah.
became decimalized, and it was easy. I mean, it was all momentum based. And when you threw decimalization into the mix, it really, really screwed up the way I approach the markets. And you have to adapt. And I think every trader out there really needs to understand that whatever you have working right now, the market dynamics will change, and you have to be able to adapt to it quickly and realize that the market's changing at that time as well.
Yeah, we're going to take a 20-second break. When we come back, maybe we'll go back to some charts, Gareth, and I'll ask the two of you what you guys are seeing in the markets right now. I know we're traders and we trade level to level, but let's maybe talk about what we see potentially happening next. Back in 20.
Choices in your futures trading. Explore TradeStation's advanced trading platform, equipped with customizable tools, charting features, hundreds of futures products, and more. Plus, get 50% off brokerage fees when you open a new account. TradeStation.
All right, after that quick break. So I want to see what both of you guys think about what's happening in the market right now. I know that really, even though we are definitely more, on the shorter term side of things, but this year we're at this point right now where, I'm really talking on the equity side of things where it's, everyone's really getting a little edgy here about what this end of the year is going to look like. And I know we're all waiting for the Fed and all of that type of stuff, but maybe we'll start with you, Gareth. When you look at the charts, when you look at the sentiment, when you look at the macro picture and everything that's going on, what do you see happening potentially the rest of the year in Bitcoin?
Yeah, so I think with Bitcoin, the charts right now, we have a nice little wedge pattern. In fact, I'll bring up my charts here and we can just take a quick look. But basically, and bear with me while I pop them up, but
Yeah, no problem.
basically I'm in a position where the Bitcoin daily chart is in this very tight wedge pattern, and it's basically going to be forced outside of the wedge pattern probably within the next week, right? So we can put a trend line right here, and you can see you're basically hammering on it, and then you can even connect from the June low right up underneath. And you are, it can only go so far before it's going to be forced out of this wedge. So the question is, well, which way does it break? Part of me is leaning towards, at least per what I'm seeing and calculating, is that we could be due for a short-term kind of squeeze, maybe as high as 22.5 to 25,000. But it doesn't change the fact that we're still inside of a bigger macro pattern. And so the macro pattern, for instance, would be what we refer to as a bear flag, right? So if we put a line here and we drag up that, this is definitely from this move down, or you could use any of these moves down. This is longer term consolidation, which is bearish. So even if we get a short term squeeze, let's say to 25, it's still within this range. And therefore, I would say by year end, I'd be very surprised if we haven't already taken out the June lows and headed lower.
Yeah, so I guess it's just very similar almost in thinking of what's happening in equities, from my standpoint, right? Like the rallies are just going to be met with resistance. We're in this overall massive downtrend. Don't go chasing rallies. And I guess what you're really saying, and maybe correct me if I'm wrong, if we were to stabilize, let's just say above like the 25,000, and maybe we would see some time spent and maybe the trend would reverse, then maybe you would start looking at, okay, then the trend maybe has switched. But at this point, it's just a bearish look, and bounces are what they are. Trade the bounces.
It is exactly what it is. And I think you're right. I mean, there's a good trader always recognizes that their thesis can fail. And again, probabilities are what charts are, and they're giving you probabilities. So anything can change. But right now, we have to face the fact that the macro pattern, the bigger pattern, is still bearish on Bitcoin. And one of the things, I mean, you look at psychology, and you don't have the common, and Blake knows this from the .coms, you don't have the despair yet. People think, they're like, oh, this Bitcoin market sucks, it stinks, but they're not like, oh my goodness, Bitcoin's going away or it's failing or anything like that. And I think we have to get there before you see a significant bottom. You saw it in 2009 with stocks. think about the bank stocks, and I still remember vividly the fear, even myself, how crazy Lehman was, and then seeing Bank of America trading at like $1 a share or whatever it was. I mean, that was scary stuff, and Bitcoin hasn't gotten there yet.
So you do feel like we need to see capitulation in order for a true low to be formed?
I do. Generally, every bear market, you do need to see that. Otherwise, I think it's not a true I don't trust it enough. And I also think we have to recognize that with Bitcoin, this is the first bear market that the Fed's not printing money. So it brings up the question of, is this going to be a longer bear market because of that? You know, in the past ones, we've always had QE and QE of sorts going on that's brought Bitcoin up out of its bear market. And here we don't have that. So unless the Fed goes back to it, I do wonder if it can be a worse bear market than we've experienced in the past.
Yeah. I mean, that's the thing is everyone keeps all my golf friends, poker friends. When's this market going to stop going down, Anthony? I go, when the Fed stops raising rates, man. I don't know what there is to say. I mean, you can't ask me price wise because who knows? Price could change at any point in time. And maybe we have this capitulation bottom, whatever the Fed does after that, maybe necessarily doesn't make a new low. But with this underlying thought behind everybody's head that the Fed keeps raising rates, it's no different than when the Fed was cutting rates.
Right.
You know, it's
don't fight the Fed.
It's like in reverse.
It seems so easy to think this way, but in bear markets, psychologically, we all try to buy the bottom. It's crazy, right, Blake? I mean, it's a little
100%. Yeah.
So what are you seeing, Blake? I mean, you know, I love picking your brain. I remember last time you and I were talking, you got me starting to look at the euro again. What are some of the markets? I don't have the charts for all of the different pairs that you look at. So maybe if Gareth has them and he pulls them up and we can go over what you're seeing. But what are you seeing on the currency side?
Well, you know, as you pointed out, it's all interconnected. It really is. The whole market is. And this is the S&P. This has been my guidebook all of this year. And it's just a big head and shoulder pattern, which actually completes just below around 3,500. The post-COVID lockdown breakout point, longer term breakout. And so I still think that we're going to eventually get there. And the key driver right now is yield. But I'll tell you something regarding the dollar and why the dollar is, I mean, a little here. If you remember a monthly chart of the dollar, you can see this is, this we've been since 2008 GFC, right? And we've done the throw of that channel where we pierced the top of that channel and we failed. So it gave us a failed breakout. Then the daily chart is actually giving us a lower high in basically since all of this year, all this calendar year, and just before that. So the dollar isn't hitting new highs as yields are hitting new highs. And I look at the, let me just take you real quick over to the 10-year because again, it's all interconnected. I think there's a TV show that says that, but if you look at like the 10-year, follows it pretty religiously, and we're almost at the 101% extension of the summer's bounce. RSI is pretty divergent. Things suggest that we could start to see yields pull back after hitting 5% maybe on the 10-year, and if so, the dollar might be pulling back a little bit. And so if we get one flush lower in equities down towards 3,500 and the S&P, I'm actually looking to sell some dollars here. And I think that's going to be the trade. I think, you probably get some selling going into the fall as far as risk goes. But, everybody likes to play a good Santa Claus rally. And if the S&P is down 30% going into November, what's to say we can't rally another 5% to close off the year, down 25% for the year, but get a nice 5-7% rally off the lows. So that's kind of where my head's at. And as I said, it's all interconnected. So the way I approach the dollar is going to be looking at yields and watching the bond market and making sure there's no runaway freight train like we saw in the gilt market, and making sure that the equity markets find some sort of support before I start selling dollars in mass.
Yeah, Gareth, maybe go back to you just a little bit. I mean, I know I asked you really for Bitcoin, but what are your thoughts on equities?
Yeah, so I'm in the camp that we still have another leg down in equities. I agree there's going to be awesome bounces. I mean, bear market bounces are notoriously, they call them rip your face off rallies, right? Because they're just so amazingly violent. in terms of the moves up. But everything I have on my charts, and I'm mostly, I mean, that's really what I trade mostly is equities, just because there's more opportunities there. It's telling me we still have downside to go. And I think the market, I have the forecast for the macro divided into two sections. So right now we're in the down section waiting for the Fed pivot. The Fed pivot will come. It'll create some sort of rally, like Blake's saying. The dollar should pull back. It's getting closer because I think, honestly, you look at the dollar yen, we know what happened to the British pound and how the Bank of England had to step in. More of these central banks are going to have to step in. At some point, the Fed's going to have to back off a little bit, otherwise risk of global depression. But I think my big concern for the next leg lower, which I do fear could be a hugely more violent move down, after we get that kind of pivot rally, you have a scenario where the Fed is going to, the investors are going to say, okay, we are now in a recession. I think we all agree we're probably headed there. The question is how bad. And investors will look at the economy and say, okay, Federal Reserve, can you please start printing money again? And the Fed's going to look back and say, you know what? We really would like to, but inflation is still elevated above 2%. It's 4%, let's say. And that's going to be a wake-up call, right? The market is not, it's like a kid who's used to getting their way with their parents, and then all of a sudden the parent puts their foot down, and the kid's like, oh my God, what just happened, you know? And so I think that's where you get that next violent sell-off, where the economy goes into a recession, and we say, how long is this recession going to last? Because we've never come, the only time we come out of recessions in the last, 15 years is when the Fed prints us out, and the Fed's not willing to do that at this point. So I think that's going to be the big wake-up call, maybe in 2023, where we actually could see under 3,000 on the S&P.
You know what's interesting is that we need capitulation in multiple themes here, right? We need it in the macro side of things. Like we just need it to just end, right? We need the Fed to stop raising rates. The market gets, the economy gets pretty bad. The market bottoms out. You see these types of moves because it just seems as though we are just in this unraveling type moment, right? And I think that's what's so difficult about the investor side of things is that they look at it and say, oh, NASDAQ's down 30% or whatever it is, right? They look at that percentage and in their mind, they're looking at it and saying, well, this is, typically a good time to buy. And historically, it probably will be, right? We don't know how much further this goes, but I think the trader psychology of it, what's so difficult here is that these trends last so much longer than we ever thought they could, right? The bull market lasted way longer, I guarantee we'd all probably admit, than we thought it would, right? I mean, come on. And it went so much further. I remember selling some of my stocks being like, man, that was a great trade. And I just like, wow, dude, it really did another 100%. It's the same thing happening now. We all have this fade mentality when the actual information that we're talking about is right here in front of us. Just trade it.
Right.
Yeah.
And I think remember that there's a huge amount of new investors that came in during COVID and after COVID because they were at home. They discovered the markets. They discovered crypto. They never
discovered Robinhood.
Yeah, Robinhood, right?
Yeah.
Exactly. And they've never experienced more than like a 2-month dip before we were hitting new all-time highs. And so there's kind of this reckoning that almost has to come in where like, all right, now the Fed's not here to save us. Back to normal bear markets that can last a few years.
Yeah, and I hope that the retail traders out there understand that, you've not arrived until you've made it through seeing bull and bear markets and recognize that these things can go so much longer than you ever anticipated, right? I mean, that's what our job is here is, we're trying to help people get better at this because obviously navigating this, even for us who've been doing this for a lot of years, it is difficult. I find myself sometimes going like, what are you doing, man? Like smarten up, better. I want to leave everybody with a couple of things. Well, actually, there's one question about currencies that we didn't really talk about, and it's not something that I would even know how to answer. This is from Jim Valentine. Jim joins us for a lot of the podcast, so I appreciate that, Jim. The IMF is increasing its holdings of the yuan. What do you guys feel about the strength of the yuan in the future? Is this something you guys follow?
I mean, I would say that I think it's an attractive currency at some point. And whenever you have that Fed pivot, let's call it, or whatever, wherever we go, that was the bottom and it's time to start buying stocks. I think that's when you want to own yuan. The problem is right now is China is facing a lot of obviously economic pressure. Their economy is slowing rapidly. You've got Xi that's like, he's going for an unprecedented third term. And so China can engineer right now a lower yuan, strengthen up the dollar, and really bring in more. It helps the Chinese economy because they can export more when they weaken their currency, because the buying value of the dollar or anything against the yuan is going to be better, and so we're going to import more from China. That's one way that they can actually manage the float to help them. So I would like to see, in order for me to be a longer term yuan buyer, and also believing that the market or the world is going to want to move away further from a dollar based system in the next, probably the next decade, and we're going to bring in probably other currencies like the yuan or the euro that might share some of the reserve currency status. So I do think longer term you want to be a buyer, but you want to also know that the economy globally is on much better footing than it is right now, because right now it's pretty scary, and China can engineer a weaker currency at any moment, and to help them. So that's my opinion there.
Thanks for answering that. I mean, like I said, that's way above my pay grade. I'm the first to admit. But Gareth, any thoughts on that at all, or no?
Yeah, I think it makes a lot of sense, and I think the best example right now is what's going on with other currencies, right? When you have the U.S. dollar as the reserve core, and what the Fed is doing is crushing these potentially other economies through their currency. It's a great example of why we need a more multi-layered or multiple reserve currencies out there. So I think that makes a lot of sense. I also think that it's recognizing that China is going to be the biggest superpower out there in the future, in the next decade, and they're probably starting to position themselves for that.
Yeah, it's funny. I know you mentioned, Blake, that you're going to have Danielle DiMartino Booth at the Trader Summit, and she's been on the show a bunch of times before with me, and we've had a ton of great conversations. And I remember one time in one of the conversations, her and I were talking about how her kids actually know Mandarin.
Yeah.
I go, even your kids are smarter than me? Come on, man.
It's one of the, I'm actually half Chinese, and my mother speaks Mandarin, and I was born in Taiwan, actually. And to this day, I always harass my mom because she wanted to Americanize me and she never wanted to teach me Chinese. And I'm like, Mom, come on, why'd you do that to me? But anyway.
Yeah, we actually got another good question, and I mean, I might as well take them while I've got you guys here, because it's not often everybody gets access to you two great guys. So this is from Anthony. Thoughts about Russell Napier, who says this is a multi-decade structural shift, not just a cyclical shift. And we'll start with you first this time, Gareth.
Oh, wow. So I agree. I think there is a bigger movement going on here. I think there's going to be a move away from U.S. investments, and I'm more speaking from investment side of things, as that's my forte. But one of the things that I look at is that if you look at the Hang Seng, or if you look at the Brazilian stock market, they made these crazy highs in '03. I think it was for the Brazil stock market, and '08 in the Hang Seng. And since then, they've gone just sideways, right? Big moves up and down, but they've never really taken out those highs. And I really do think that you're getting into this position where you could see the U.S. stock market, and I've gone on record saying this, I don't think we'll make a new all-time high for at least 10 years, much like the NASDAQ after the dot-com, because you pulled so much of the gains forward. So much money got drawn into the U.S. as that was the top place to invest. And you're going to see people that are underinvested globally starting to pull money out as the U.S. weakens and other economies start to kind of strengthen and become more dominant. So I do think there's a structural shift going on here, and I do think it's the beginning of something.
Yeah, and I just wanted to say that I think that that shift is happening in different ways that you might not even be thinking of. You take countries like Mexico, for example. A lot of U.S. companies and corporations are manufacturing through Mexico instead of China, moving their operations to South America, and that is because China, as a superpower and a global powerhouse, they've really almost they've shifted the demographics so much to where they haven't, their working class demands, instead of having one big bag of rice a week, they want 4 big bags of rice, or, instead of living in a hut, they want to live in actually in an apartment. And so they've really shifted towards a middle class from a low class, and labor is just not that cheap. So you're going to see, I think, manufacturing make its way over to India. It's going to make its way over to Mexico and South America and different spots. And I think that is a shift in itself. And you got to think about how that's going to affect your portfolios, from how you position, your equity market exposure, to how you can benefit in currencies. I mean, some of the best currency trades are what we call carry trades, where you're carrying a currency that has a higher yield, like Banxico carries, over that of the Federal Reserve. And if the Fed actually has to, soften rates a little bit, some of these emerging market currencies and central banks won't be able to do so. So I think there's going to be, bigger shifts than people believe. I think people think, oh, we're going to go back to normal, whether it's, and I agree with you, Gareth, by the way. I think we've had a very long party that's gone into like 3 a.m. 4 days later, and we're going to have a hell of a hangover for a long time, be it 6 years, be it 10 years, maybe even longer, where markets go sideways. But there are going to be opportunities, and I think you have to be open to those. So
Yeah, and people are asking some questions about dollar yen and things. This is recorded, everybody, so you can go back. We've had actually a really good discussion on this, and I want to leave these guys with this last question for each of them. The focal point today was how to become a better Bitcoin and currency trader. We'll start with you, Blake. What is the one piece of advice you would give to the people out there right now trying to get better at trading currencies?
Well, it's like the ladies say, size matters. Your positioning matters in this market, depending on what you're trading, how big your account is. Make sure you're trading, appropriate size. And the great thing about trading currencies is that you can start off in like a very, very small amount, and you can work your way up from there. Like when I'm talking small, you can trade, they call them micro lots, and you might only be losing or making a couple bucks at a time, but that's fine. Get your feet wet, get involved in the markets, and then trade accordingly. Always manage your risk. Always know, where's that line in the sand? Where's that place that you need to exit the trade no matter what, and adhere to it. Don't widen those stops just because you have this gut feeling that the market's going to go your way.
Gareth, same question to you.
Sure. So I agree with Blake 100%. Like, you have to start small, mainly because you're at the whims or the control of the market and the market sentiment, and you're not able to control your emotions just yet. So you're going to try to the market will try to swing you to do the wrong thing at the wrong time. And I would say just do your best to learn, learn one thing new a week about a chart. It adds up over time. Pay attention to sentiment. When you see everyone screaming at the top of the lungs on Twitter about something, don't jump on board then. Maybe pull yourself back and say, wait a minute, if everyone's saying this, maybe that's not a good time to enter. So, I mean, just little things like that, you can really improve yourself.
Yep. And, I want to plug it one more time, and I've got the link. Go click on the link. It's free. It's Trader Summit. You've got Garrett there. We talked about Danielle DiMartino Booth. She's one of my favorite Italians. I always tell her I love her. She's great. You've got Peter Schiff there. Nothing else, he's entertaining, right? And he's obviously a very smart guy. And I say that in jest, but I really like Peter. But we pretty much know a lot of what he believes about what's going on. Just a whole amazing cast of people there. And I highly recommend you do it. Click on the link. It's in the chat. Come and also follow these guys on Twitter. Just two great guys. And Gareth, I got to tell you, first time meeting you, watch your tweets, watch some of the stuff. So I got to know you a little bit before you came on. And now, I'm just a huge fan of yours. I think you're a great guy. I love the message that you bring to traders. And Blake, you're my brother. And
yeah, that's right, man.
I thank you guys so much for joining us. Go to Trader Summit, follow these guys on Twitter. Their links for where they are on Twitter are also in the description. And I saw a lot more of you coming through on Twitter and on YouTube. Hit the like button, hit the share button. People by liking and sharing is what allows me to bring in the great guests like this. And I appreciate all of you guys for your questions. That's it for today, everybody. Once again, guys, thank you so much. And I will see you guys at the Trader Summit. Have a good rest of your day. Peace. Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.